Good morning, traders. It is 8 a.m. Chicago time, 9 a.m. Eastern. Unfortunately, it looks like we're dropping frames already, so we're going to see some buffering today. Unfortunately, it looks like I have to have people come out and take a look at this again. Apologize for this. I'll upload the video as soon as I can. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market's shaping up to be relatively strong. The S&P is slightly lower, but we are or unchanged. But overall, unchanged from settlement. But overall, it's we're seeing relative strength in the DAX, Euro stocks, and the Russell. Russell up 5.6%, 5.6 points or 0.39%. Crude oil is strong this morning, trading a little bit higher. Yesterday it dropped and it picked back up. It's currently trading at 50.73 this morning. So let's see. We are not getting data, I guess. So let me just double check these numbers here. Looks like my data. It's amazing what could happen when the market is not, when your data is not operating properly. Okay, looks like my data is catching up now. Just one more second, I apologize. While I have you, I want to remind you that today at 11 a.m. Eastern, I'm going to be speaking on the Professional Traders series through Bookmap. I'm the keynote speaker. I'm going to be covering how I'm narrowing down my process to using order flow for execution, but more importantly, to manage the positions. That's where I'm going with the discussion today. Just to look for an invite. Also, the invitation is in the description of this YouTube video, as well as on my website. I'll show you that in a minute. Right now, the markets looks like the data I quoted earlier is not correct. Crude oil trading 50.38, slightly down 32 cents. The laggard today is gold. Gold took a beating, down $22.40, trading at 1,294. The leaders today are the Europeans. Euro Stoxx 50 up 0.6%, DAX up 0.35%, and the rest are down. The S&P 500 is just slightly down from its closing price, trading at 25.04 quarter. So we have a mixed bag coming into today. Looked a lot like yesterday, minus the fact that we were waiting for the FOMC. So all looks good in terms of the market moving under its own power today. As far as what we are expecting, this morning we got really strong initial claims, really strong number. We also got Philly Fed. This morning, Philly Fed reported 23.8 versus 17.1. So those are, I'm not sure how much they will drive the trade. And then we're waiting for the 10 o'clock Eurozone Consumer Confidence Advance, expecting negative 1.5 for September. And the U.S. leading index for August, expecting 0.2. At 9:30 Eastern, we get ECB Speaker Draghi at 9:30 Eastern. That's right at the open here in 25 minutes. Let's move on real quick to our plan for yesterday. Yesterday, the idea for, looks like we're buffering. The idea for the primary hypothesis is for the market to do a quick test up and then to drop. I was looking for the market to drop all the way down to around 25.02, 25.03 before the move into the FOMC, expecting a pop up on the FOMC. And that's pretty much what played out. The market did push lower than expected, and I'll show you that in a minute. How much lower? I'll show you that in a minute and how it played out in terms of the auction. Secondary hypothesis is to drift down to the prior day's value low at 25.0375, then to hold steady until the FOMC, and then it's anybody's guess. What actually happened yesterday? Here it is. We tested immediately up. We tested above the prior day's high. Remember, I said coming in, we had a double top day to day, a 2-day double top with a weak high that's likely to break. We broke that. We went to 25.07 and a quarter, rotated down, came back to the open, consolidated, and then we FOMC. Very dull trade in the morning. Tough finding opportunities in there, in my opinion. And then we get the FOMC. The FOMC SOC, the scene of the crime, was 2305.50, 2305.50, which was tested immediately right there. We pulled right back to it. It became the mid. We tested the mid, and this is an outstanding opportunity here, pulling back right to the mid, consolidating. Was showing weakness on the tape in the order flow. That's what I'll talk about today with Bookmap. Showing weakness, and then we get the continuation, which turned out to be another impulse. And then we pushed to 24.94. 24.94 is really important from an auction perspective. Again, very, very hard to see that from just the bar chart or using indicators. This is the advantage here. We went right to the most traded price from the 12th to the 15th. This was the consolidation after the gap up. So we have a gap zone. We popped up. We went sideways for days and days and days and days and days. And then we gapped up again. And then we went sideways until the FOMC. And what did we do? We dropped. We tested the point of control right here, the black line, almost to the tick. We missed it by a tick. And we found responsive buying. So we found an excess low, and the market went right back through the scene of the crime, the point at which the news came out, and continued. Was unable to go neutral. I was really betting on neutral yesterday. Surprised it couldn't go neutral, meaning breaking the 25.07 quarter, which was put up in the first hour, the initial balance high. And it just finished right at the point of control. It just ended up getting stuck there. This is, to me, a clear rejection of the prior balance. In other words, it's a clear rejection of the value that was generated over 4 days from the 12th to the 15th. It's a clear rejection of that value. We saw an excess low there, not a very clean excess low. If you look at the market profile, you can see here that we didn't generate a big stream of single prints. We ended up trading over it, but that could be just, the fact that we switched from 1/2 hour period bracket to the next. But overall, what I see here is more trouble for the shorts, and the market is likely continuing higher from here. The other thing that to note is, the Fed yesterday, the main thing that they announced is that they will begin unwinding their $4.5 trillion balance sheet in October by starting to not reinvest in some of its bonds. If the Fed does not reinvest in these bonds, then the yield is likely to go up. If the yield is likely to go up, then interest rates are going up by definition, which is beneficial to the financial sector, right? You're getting more interest on the money that you borrow cheap from the Fed. That's good for banks. And so we saw the financial sector just absolutely pop yesterday. Not a huge move. On a relative scale, it looks big given how tight this thing has been trading until we've approached the Fed. But pretty good. It pushed from 25.24 at the SOC all the way up to 25.49 at the top. So, and it's holding steady. So what we have here is an impulse, and we got a little bit of continuation, and now it's flagging. So the anticipation by those stocks is that it is beneficial to those um, to those banks, and so that's where we end up. Not just banks, but the financial sector in general. The XLF represents a lot of financial companies. So that's what we have. We have what looks like the Fed showing a little more confidence in the economy. And as a result, the market sees a 6.5% chance of Fed rate hikes this year. It was a 50-50 coin toss. But when we started the Fed meeting on Tuesday, now it's popped up, or they're pricing in 60.5%. By the way, for us traders, it is good to have a risk premium on money. It is good to have interest rates rising. It forces market participants to not be so lackadaisical about risk, right? Looking at the weekly and what we've accomplished. So if I split this profile, you'll see how we traded on half-hour brackets on the week. So gold Monday, purple Tuesday, and red Wednesday. And clearly, we're continuing this P-shaped short squeeze, P-shaped short squeeze. The market clearly rejecting the prior balance. So you see how it's tested almost to the tick. It's tested the prior balance zone beneath us and the major acceptance price beneath us at 24.94, and has moved back up. Again, another indication that we're still one time framing up or holding on to the rally, and that sellers are relatively weak at the moment. We would have to see it push all the way through the gap zone and all the way down for the higher time frame to start looking at this in terms of weakness. We would need to see the market in the 24.74, 71 area. So a long way to go. Let's get down to the hypos. The overnight session. This is NQ. Let's get rid of that. And TFS. Let's get rid of that. Overnight session. Not much to do. Look at how much kurtosis there is as I eliminate everything else, and you can see the profile clearly. Holy crap, this thing traded a lot in a small range. 145,000 traded overnight, which is about normal, right in the middle of what's most common. But all of it happening in just a 4.75 point range, and very, very tight with this kind of open, given that it's in right up against the point of control, and it's trading right in the middle of the overnight point of control. With this open, what we have here, what the market is telling us here is that there's really acceptance in this area, and anything goes. So the hypos are going to have to be very, we have to use a lot of caution today. We're likely to open and go sideways. We're likely to have a very dull trade coming in. Don't forget, again, as a reminder, 11 a.m. Eastern, I'm speaking live for Bookmap and their professional trader series as a keynote speaker, and I'm going to be discussing execution. If the market gives me something to trade, I will trade it, live in front of you. If not, I'll have to revert back and demonstrate what I need to demonstrate using recorded data. So I'm hoping that we get some movement today, just for everyone to be able to see how I'm managing trade live, but we'll see. Right now, it doesn't look so promising. So this morning, I'm looking for it to go sideways. I'm looking for us to get one impulse up, test above the high, and then hold steady. I'm expecting a very cortotic profile, in other words, a very fat balanced profile today on Hypo 1. Not expecting too much. The secondary hypothesis is to test up get back in balance, and then fail at the lower high put in yesterday, and then start to rotate down looking for an initial target of 25.01 quarter, the value area of yesterday, poke through, and then come back during the close, come back into balance. That is the better opportunity, but I'm not holding my breath. Also, with the FOMC out of the way, it gives us hypo 3, which is a test lower, gives us a strong impulse up, and then we start to move higher with confidence as we push and continue to squeeze the shorts and push into new all-time highs as we've seen over the last few weeks. So that's hypo 3 for you. Okay. Again, I want to remind you, 11 o'clock, bookmap. By the way, here's where to find the invitation. If you go to futurestrader71.com, you go to this website here and then scroll down, you'll find the invitation in the latest blog posts right there, the leftmost or the most recent post. Click on that and it will take you to a page that where you will be able to click on the orange bar and register. Make sure you register anyway, just so you can get the recording, even if you cannot attend at 11 Eastern. I'll leave you with that. Good luck today, and I'll catch you tomorrow. Take care.